nothing took my intellect and interest like Bitcoin has in my career. So I met Dave Perel, the CEO of Compute North. This role opened up, and I said, I'm all in with what you're doing and the trajectory. So my role there is oversee the miner financing relationships, mining manufacturers, joint ventures, partnerships. If energy companies want to mine, working with them to see what we can do to partner with them. So that's my personal story. We can get into Compute North and co-location. But Darin, do you want to tell your story?
Let's follow them up sequentially. Give us the Compute North story, and then I'll
right
do
on.
the.
So
mine.
Compute North, our mission is to develop and manage the most sustainable and cost-effective computing infrastructure in the world. We were started in 2017 by Dave Perel, our CEO, and PJ Lee, our chairman. Dave came with a 20-plus year background in internet startups and data centers. So he knew the data center space well, developed data centers, sold some, had some exits. PJ Lee came with a 15-plus year career. He had his own private equity firm focused on renewables, investment banking, so knows project finance, knows green energy very well. So those two got together and started the company in 2017, started mining Bitcoin and found out about the industry and what this Bitcoin thing was and what the infrastructure needed for Bitcoin looks like. So they had a facility in Texas as an airport hangar. Now they have some containers outside of that where they started mining Bitcoin. Same thing in South Dakota. Bought a data center there, and then after that expanded into the current model, which is containerized compute. So we have a facility in Nebraska and two facilities that we've announced in Texas the development is underway, and more facilities over and above that. So our primary business model is co-location, and we host a lot of miners, and we have about 150 employees at our company, and various expertise when it comes to energy, the finance side. Those two are extremely intensive, as Darin knows, in the business. You need to really have your hands around those, especially when you're developing these at a large scale. So,
yeah, great story. The two founders of Compute North, Dave and PJ, I've met with dozens of times over the years, and they've done a really good job of staying alive. The guy had to go through the crypto winter 2018, which was interesting and wasn't easy. And we've met a number of times all over Texas, and my team and Dave and PJ, they all get along, and they do a good job. So Compute North has done a good job over the years putting together infrastructure in the proper way. And out of all of the companies I think we met with in 2017 that were building infrastructure, as we were, I could think of two or three of them that survived. So I think there was about a 90% attrition rate after the crypto winter of 18, which is what we're going to have again, in my opinion, now. And what's happened every 3 or 4 years in this industry, you get a shakeout of the people that put together business models that were not able to sustain downward trends in the market. And so one of the things that the founders of your company have done well is withstand the turmoil and tumultuous markets as they take place, and that's going to be the true test of which companies can weather the storm that we're in right now. And when it ends, you can only surmise, you can guess when it's going to end, but you really want to figure out how you create value and hunker down and make sure that you withstand this next period of time. And so, yeah, no, that's great. I don't know if you guys haven't heard my entire story, but I'll just give you a brief overlay. I started mining in 2012. My background, I'm an accountant. Before that, I was also a lawyer. And in 2011, through a series of events, I was introduced to Bitcoin. And my initial reaction is probably the same as most people's reaction that are from the finance or legal fields, is that this technology sounds like it's a scam. So in 2011, when I looked up Bitcoin, I saw the first thing that anybody would see in 2011 was that people utilized it to buy narcotics on the internet. And so people were buying drugs on the internet with Bitcoin. And the other articles were about the illicit activity. And so having privileged licenses, I passed on getting involved. And a short period of time later, just because I was cognizant of the technology, I saw an article that talked about this technology being an immutable ledger. And I briefly talked about that before. The immutable ledger technology in the article caught my attention because it's impossible to have an immutable ledger. No ledgers in the history of humanity have ever been immutable. So it's really accounting terminology, and unless you're an accountant, I don't know that that would shock anybody, but it was interesting to me. I'm going to bore you guys with an accounting story for 1 minute, and then we'll get back to co-location.
Let's go.
But accounting runs the world, right? It's the operating system that runs the entire world. Right now we use double entry accounting. For a network and a technology that runs the entire planet, every bank, every government, every corporation, the rails they run on are double entry accounting. For the most important technology that runs everything on the planet Earth, you would think that there was more than 2 innovations in the history of all humanity, and you'd be wrong, because there's only been 2 innovations in accounting. The first happened 10,000 years ago. Somebody went to a market, bought sheep or cows, wrote down, I have these sheep. You add that up, that's the birth, single entry accounting. That's the birth of accounting. In the 1400s, it took a little while to innovate from 10,000 years ago. In the 1400s, they came up with a second entry. I bought 5 sheep. I paid $5. So you had debit, your asset, and a credit, the money going out. You add that up. Technology created in the 1400s. You add those 2 columns up, you get every single financial statement that all of you look at every single day. All of those were birthed from the 1400s. The double entry accounting ledgers that everybody uses are terrible technological systems. It's a terrible system. And it's terrible because it's so old. It's an antiquated system, and it is an analog system. It's not a digital system. And the problem with it at its root is that the people that control the books and records, they can change them. They can change them. And guess what? They always do. They commit fraud on accounting ledgers, and then the other human risk element is mistakes. So you have fraud and mistakes on all human ledgers for the history of humanity, and that's just how it was. Nobody had any incentive to innovate double entry accounting because governments, banks, and corporations, mostly governments, they don't want to give up the power to change the ledgers. They don't want to change. They don't want that kind of change. And so the Bitcoin network thrust a new accounting innovation on all of us, which was a debit and a credit, and then proof of work, which is what you hear all the commotion about, which displaces proof of stake. Proof of work is simply a consensus mechanism run by the computers that all of you either own or are a part of here at the summit. The computers run a consensus mechanism that audits every single transaction to its inception. So you have a self-audit, you have a system self-audit, and after the audit, it's written to a third entry. So you get a single entry, a double entry, and a triple entry. Once it's written to the triple entry, it's unalterable, it's immutable. For the first time in human history, you have an unalterable record of every transaction that ever occurred. That's unique because as an auditor or as an accountant or as finance people, all of the ledgers that you get are usually wrong. They're wrong because people make mistakes. So for the first time ever, you can look at a ledger and know that it's the truth. It's the truth. It's the truth on chain. It's the first time in human history we have truth on chain that doesn't need to be audited by humans. And so if you build anything on top of that, you get a better system. So anyway, the genesis story of my involvement was that piece of information. The accounting technology is the most important part to understand in order to differentiate this technology from proof of stake, because everything is proof of stake until now. Now you have the option to have proof of work. And so you really have to understand the accounting implications of that. But as an accountant or as a prior accountant, when I figured that out, I decided that I wanted to be an accountant for this network. Unfortunately, they're called miners, which is a really silly word, and we're stuck with the negative connotations of that for, as long as it takes for somebody who's smarter than me and better at marketing to change it. But I decided to be a miner. If you read the white paper, Satoshi Nakamoto never said the word miner. He also never said the word blockchain. Blockchain was invented in 1991, and it's very uninteresting as an accounting ledger because you can change it. And so everybody saying blockchain is the innovation hasn't read the white paper, and they're not familiar with what a blockchain is or when it was invented. Blockchains are old technology and uninteresting as ledgers. What the innovation was the proof of work network within the Bitcoin code that, and Satoshi called it a time chain. So it creates a time chain. You have actually two chains, a chain of transactions and a chain of blocks. So I became an accountant for the network in 2012. I started mining in a closet in one of the office buildings that we had ownership in. And then we ran out of power there. And we started mining all over the U.S. I started buying equipment and sending it to various locations, Georgia, North Carolina, Washington State, unanimously over a period of 3 or 4 years. They all failed. All of the third-party data centers that I sent my equipment to failed. They either ran very inefficiently, they either were regulated out of existence, and some of the people, they just stole our equipment. And so we dealt with all of the troublesome metrics of what happens when you get in the middle of a startup company. And in 2016, 2017, the same year that Compute North was birthed, we decided to, my chairman, his name is Mike Levitt, who is now the CEO, we decided to move the company into the Appalachian Mountains on a 70-acre parcel of land that had a 230,000 square foot building. It was an ideal location because the Appalachian Mountains are filled with hydroelectric dams built by the United States government as critical infrastructure in the 40s to power the Manhattan Project. So after the Manhattan Project, you had lots of excess power up in those hills, and it was 100% renewable and stranded, which meant it was inexpensive. And so we located up there, we built that facility out, and here we are today. So that's the genesis of Core. For clarity, I am no longer involved in operations of Core. I am on the board, and I am the Chief Vision Officer, which, like the name miner, is who knows what it means. But I come to things like this and meet people like Brett. So hopefully that's gave you some clarity on the accounting of the network, which is really important for everybody to understand.
Yeah, we appreciate your contributions and evangelizing and educating. It's a big deal. So you've done a great job of that. On behalf of everyone in this room, thank you.
Thank you.
I think one of the things you said when it comes to the trial and error, things you tried, you had your miners stolen. I think even a lot of our customers from a co-location standpoint, like there are different strategies. Different customers have different strategies. Some want to vertically integrate. Some are choosing to put all their capital behind their miners, and that's their strategy, and they find the best partners. I think a lot of our customers have tried on a smaller scale, developing their own facilities, understand how difficult it can be, and how difficult it can be to build it out, maintain it, negotiate power. There are just so many moving parts. And you have to be an expert in so many different areas. So I guess one of my realizations, as getting in this industry the last, 2.5 years, and particularly recently for Compute North, is just getting my arms around the number of experts walking around the building who can speak fluent energy, who can know how to hedge, having the financial backing to hedge. It's not uncomplicated, which is why there's been a migration to find good partners.
Yeah, good point. The critical point right there was they have hundreds of employees, and so do we. In order to run buildings like this at scale, you need a massive amount of experts in the field. Historically, they don't exist. The math to dissipate the type of heat from these machines, wasn't in a textbook at MIT. And so none of the PhD people that were running around that worked at Google data centers or the like had any idea how to properly dissipate this heat. So you saw a lot of mistakes get made in 17 and 18. And you still see a lot of people that are in the space that want to look at this as a traditional data center company. I think one of the first engineers that we had that failed the first time and then lasted with us was, he said, you need to forget everything you've ever learned if you worked in a traditional data center and start from zero and then build this out. And so it's a very complicated build. The power, again, is very complicated. I'm certain you have the same power team that we have. The power teams are dealing every single day with city and state and different organizations that run the power in the different facilities that we're in. Those contracts are very complicated, and there's sometimes daily requirements to update everybody on what's going on. So you have a complication on the power side as well. The other thing that I think is the biggest risk for companies that I see that are sprouting up historically, and that's I've seen this industry turn over 3 or 4 times, are the people, and they didn't have this cute name back in 2012, but they call themselves asset light. They have an asset light business model, which means that they're buying miners and they're sending them to some facility to co-locate. How those asset light people model their business is going to dictate their success, because what you're buying is a piece of equipment that's going to work for 4 to 6 years and provide a stream of revenue, and then you're going to have nothing. And so you want to make sure you get your capital back. You want to make sure you're not over leveraged, and you want to make sure you're not over promising to shareholders or investors that you have some kind of billion-dollar company when you're just buying miners and sending them to a facility. And so those are the people that end up in a lot of trouble over the years. This asset light business model. In 2012, 2014, when I was buying my own equipment and sending it to Washington State, technically, I was asset light. I was an asset light business model, and it's a very inhospitable world you're basically trading a commodity and rooting on the market to go up or down. The real technical advantage and where you're going to provide value is to create innovation, to create value. You want to create something in this space that is going to make your shareholders and the money that you're going to capital allocate valuable into the future, not just for a couple years, unless that's your goal. I mean, lots of people buy miners to make money over a certain period of time, and that's great. It's necessary and it's good for decentralization, but that's different than a long-term business plan. And so I challenge people to critically look at that asset-light business model.
Yeah, I think if you look at other just trends or opportunities in the co-location space, in data center space, we're not just we develop and manage these data centers. It's not a Bitcoin. We have a lot of Bitcoin mining companies that we host. That is the first and most major application for these interruptible loads and flexible loads that we bring to these energy generation sources, and they're not mission critical, right? So we can turn it off, turn it on as the grid needs the energy. Bitcoin is a perfect application for this. Now, there are all sorts of applications that that we're looking into and actively working on, whether it's AI, machine learning, graphic rendering, where it's non-mission critical compute needs, where we can utilize these data centers for other types of compute. And if you just look at the trend line for AI and what the compute needs are, the trend line of as to what that looks like, and I know you're well aware, I mean, it's pretty crazy, the demand and the economics that we can pass on to our customers, because we don't have the redundancy that's needed for a tier 3, tier 4 data center where they have generators for the generators and just a lot of backup. So we think that there is a very compelling model, and when it comes to just our narrative in our company and our risk profile, there's a different business model we can build in different vertical, adjacent to Bitcoin mining and hosting Bitcoin mining. And there's co-location, there's also infrastructure as a service. If we have our GPUs that we can, people can rent. So these are all things as you're looking at co-location partners. I mean, understanding what their business model looks like. Is it, and I think how they performed, have they survived, and what's their strategy? And I think those are all key. Are they a one-trick pony or not?
Yeah, I think those are all good points. There's a big misconception on this industry on what everybody does. They take Bitcoin miners and they lump them all together as if they're all doing the same thing. Some people are just buying equipment and sending it to co-location facilities to host, and other people have hundreds of thousands of square feet of data centers with hundreds of employees. In the case of Core, we have 90 patents on our different processes that are both applied for and issued. And I'm certain Compute North has a similar number since they've been in the space just as long. But you're creating a massive amount of value to host, as a co-location partner, equipment of a specific nature. And as Brett just mentioned, the artificial intelligence compute equipment is very similar in style and in function as Bitcoin mining equipment, in that the more times that they can compute information, the faster theoretically the equipment or the artificial intelligence thinks. And so they're trying to generate as much compute power in a box as well. And you're seeing some of the equipment that are released from companies like NVIDIA, where historically NVIDIA's put out equipment that has 300, 400 watts of power that's needed to run it, which could go inside of a traditional data center. But now the new equipment like the NVIDIA DGX, that uses somewhere around 7,000 watts of power. So almost twice as much as a Bitcoin mining machine. And so you're looking at new equipment that's going to come to market, that's going to have a bigger footprint in terms of the energy necessary for that specific component. And those are going to look for homes in some of the facilities that we've been talking about. We have, in the past, dealt with AI. You mentioned GPUs. There's lots of services that you can provide when you host GPUs, rendering and the like. And Core Scientific has a footprint in that business as well. So there's a very big differential between a data center company, which is what our companies are, where we also have a business line where we self-mine digital assets, and companies that just buy the servers and send them to a data center to host. And that'll shake out. The revenue generated from data centers historically trades at a different valuation. And right now you're seeing Compute North and some of the other companies that are in the space that have data centers, that their revenue generated from their data center business, it gets a zero valuation because they don't believe that this will exist in 5 to 10 years. So as this industry continues to thrive and grow and the adoption rate grows, the data center revenue, in my opinion, becomes a very attractive metric to value these companies at.
Yeah, most definitely. I kind of feel like, go ahead.
I think we're going to stop, ask a couple questions. I don't know if we're out of time. I see you standing up back there.
No, you guys are great. Thank you so much. But yeah, we will, if you don't mind, we could do some Q&A.
Yeah, we'll do a couple questions. Just both of us can't answer any non-public information. I can't talk about specific operations related to Core, and certainly neither of us can talk about future projections of any of our company.
But looking forward to not talking at you anymore and actually listening to what questions.
Other than that, feel free to ask away. We put that guy to bed.
Here we go.
Bring him a coffee.
I think it was me.
He hated my accounting story.
You mentioned the valuation of pure data center play is different than that of Bitcoin mining. Can you elaborate on that?
Yeah, if you look at so a company, Switch, just sold, and I could be wrong on the exact figures, but Switch had about $500 million in revenue last year, and I believe they had $17 million in net income, and they traded at $8 billion. So I think you could look at any of the infrastructure data center company in our space and see a difference in the valuation there.
The multiples are significantly different. I mean, if you look at Bitcoin miner multiples, just the miners that are out there, the publicly traded miners, and then the multiples on data centers and what they're trading for, it's...
Yeah, the best analogy I heard from an analyst was this is akin to cell towers. When cell towers first came out and started getting put on top of buildings, they traded at 3 or 4 times revenue, and now I think they trade at 30 plus times revenue. So it's just a matter of educating, once again, people on this industry and the differences between all of the companies that are in the industry. Right now, they're kind of all viewed as the same.
But they're both doing non-mission critical compute, right? It's just different. It's a lot easier for people to get their heads around compute for AI, using energy for AI, machine learning, right? These aren't as threatening.
You have computation, and then you have storage.
Yeah.
We're heavy on the computational part. Most of the storage facilities, right, if you turn them off, people are going to die, right? They're running air traffic control. They're running hospital records. You can't turn off traditional data centers. So you get into the different types of data centers, and the night. You have one more part of your question, it looked like.
No, I was going to say thanks for making that distinction. And so these are a controllable load, basically. Sorry, not a controllable load, but they're not mission critical, so you can turn them on and off. And
Yes.
Yeah, if you power down a Bitcoin mining data center, guess what happens? Nothing. Nothing happens. You just turn it back on. And so the traditional data center world, if you turn the data center off, and they're running air traffic control or street lights in College Station, people are going to be seriously injured or killed. And so you can't turn off traditional data centers, which have a significant energy footprint, but you can turn ours off, and that's what you're seeing happening in Texas right now. During heat waves, the flexible load that we offer contractually, we turn off for different events, emergency controlled load events, and sometimes economic.
Yeah, but it happened last weekend. We curtailed, and we're talking about 95% uptime, 98% uptime. But part of what gets us our economics, it's not the 5.9 term for data centers where 99.999% of the time it has to be up. That's down 5 minutes and X number of seconds a year. Like, we don't need that. But the economics we can get for being up 98% of the time and curtailing when the grid needs it helps us with our sustainable model and the economics. It's part of that secret sauce.
thanks.
Hey, reiterate, thanks very much for some of the insight. You did mention the multiple differences. Any insight on kind of what multiples are for Bitcoin mining operations as opposed to traditional data models?
I don't think they exist.
Okay,
I think it's zero.
I'm not missing something.
Yeah, I think it's zero. Right now, I don't
Yeah.
think their value to any of the public companies that are also providing co-location services have any bearing on their value.
And so the reference to the cell towers, we're at some de minimis number today, sometime in the future, 30.
Yeah, once the revenue stream is understood by
Yeah.
traditional investors that it's not going to go away. So I think the consensus right now has to be that this is a temporary revenue generation facility.
Okay.
And so if it lasts 5 more years or 10 more years, then those metrics start to change.
So it's more of just a timing of stabilizing the revenue flows and those kind of discussions before we can start to see what these multiples start to mature.
Yeah, we're just all guessing here. This is all
Okay.
right theory. At
Sure.
some point in the future, maybe somebody takes a different perspective, and so there's going to be discussions on that, in my opinion, in the future.
Okay. And Compute North, so you mentioned that you guys were down a couple of months ago and the winter Chad riot kind of were very public in the fact that they brought their platforms down to be able to support the cold side of the weather. Is it public, or can you share with us kind of how much power you guys pushed back into the infrastructure whenever you brought down operations?
Yeah, I'm not sure what as far as quantifiable amounts. Yeah, apologize. But there are some press releases out there. Our Nebraska facility, of just the cooperation level and us and the company doing what it said it was going to do when it came to curtailing, because these are new things for a lot of these grids, right? And there's a trust factor there. So there are press releases about Nebraska in particular, but I don't have any exact metrics. Apologize.
Yeah, we report every month how much we curtail back into the grid. I don't specifically remember this month's reporting. I think it was possibly a gigawatt, 1,000 megawatts back to the grid, but again, not certain. But they're certainly viewable on core scientific web pages. But yeah, no, one of the important parts and what makes grid stronger across the United States, if they have Bitcoin miners on there, is that we will curtail first, right? So if you have any kind of emergency weather event or other type of emergency event on your grid, if you have a controlled load event or certain economics times they'll ask us to power down, we're required contractually to power down in a number of states. We're operating in 5 states right now, and I believe all 5 states we're contractually obligated to power down when requested, and on a minimum number of times a year as well in certain jurisdictions.
Not to mention just the right thing to do, right, for the community, for humanity, for our neighbors. So,
cool. Can you guys take one more?
One more.
One more. Here we go.
So, gentlemen, when you look at the Texas growth story, do you see it really cooling much due to really the short-term high power prices we're seeing and gas coming to the moon, coming back off a little bit in the last couple of days, but the market's evolved a little bit in the short term?
yes. I think there are a lot of factors that go into making these data centers successful, right? There's the price of Bitcoin. There's the price of power, which is a huge factor. There's just the general macroeconomic situation, and which is going to make, I think, the cost of capital and the access to capital more difficult. Being able to finance miners in this environment is extremely difficult, right? So, and this is like evolving like on an hourly basis. This industry moves quickly. So I know that there are several sites that have been developed, underway, and at the end of the day, a lot of these need financing, and I think the combination of debt and equity that needs to be brought to the table for these facilities is going to be it's changing constantly here. So, yeah, I think it's going to be difficult. I see the exahash continue to go up because there's a lot of projects that are close, right, and that'll be energizing soon. But I think when it comes to industry-wide significant more development in 2023. I mean, if this sort of continues this week and it stretches into a month, in a few months, it's just going to be more difficult to pull a project off. What do you think, Darin?
Yeah, it's a good question, and it sounds like a site selection development question. Is that kind of the genesis? You curious how you?
Macro view, though, just looking at the growth in Texas across the board.
So if you're going to go into a state, right? If you're going to make Texas your priority, your main state, you want to site select to make sure that the grid can sustain your footprint, and you want to make sure the community that you go into wants you there. And so the question that's going to be critical to Texas, and I think what they're debating right now and what everybody's talking about, is can the grid sustain a certain trajectory of growth in a short period of time? And that's going to play out in Texas. I think there's 2 metrics to that. One, is the state friendly and hospitable to Bitcoin mining? Do they understand what it is? Are they unbiased in learning about it? And then number 2, can the grid sustain it? And if it can, what's the rate that it can sustain it into the future? And those are the issues that are going to have to play out. I think Texas is a great state. It's very business friendly. They're very open to new technologies and the advancement of this industry. The question's going to be and this is ERCOT question and people that are building and developing in Texas. The question is going to be, what's the rate of growth that's sustainable on the grid? And it's not unlimited, right? There's going to be certain power generation facilities that are going to hit max capacity, and then you're going to have to build more. And so the theory is that because Bitcoin miners can go to remote locations, which is a fact, the theory related to that is that this industry subsidizes privately the growth of renewable energy development generation facilities outside the ones that are stranded renewable energy. So what's going to come online in the future and what's available remotely, there are transmission lines in part of Texas that don't go to any major dense population area. So if Bitcoin miners utilize that energy that's stranded and provide economic benefit to the generation facilities, are they going to go build more renewable generation facilities close by? And then if they build more renewable energy facilities closer to a dense population center, what does that do to the traditional legacy fossil fuel baseload energy providers? Because if you create too much renewable energy, you'll put the fossil fuel baseload energy players out of business. And some might think that's a good thing, but it's pretty scary, because if you don't have a baseload energy level that's not intermittent, you're going to have civilian problems. And so there's a lot of really complicated math and development and generation facilities stuff that needs to go on here. Fortunately for CORE, we're in 5 states, so we're not 100% dependent on what the answers to these questions are. We're very curious to hear the outcome. We're part of the story, and we're part of helping to educate the regulators here on what our opinions are and what the actual network is. But you also have election cycles and people can turn over. I mean, you just saw what happened in New York. They issued a moratorium on, which is a 2-year temporary halt. Everybody says they banned proof of work up there. We talked to some of the regulators up there. They're just not interested in learning what this technology is. And so those people come and go on different election cycles. But you really need to make sure the elected officials where you're going to capital allocate and the constituents that vote them in are pro the technology and the business that you're putting there. In New York, and then I'm going to stop answering this question. In New York, when we looked at developments up there, not only were the elected officials adverse to Bitcoin mining, the population was adverse to Bitcoin mining. And so we didn't develop up there. And it was kind of a surprise to us that people did spend significant resources up in New York. We looked up near the Niagara Falls area. We looked around Buffalo. We looked around all in New York, too. And they were all adverse to it. So we stayed away. And now they're having problems, and they're acting surprised, but they should have known. And so you want to make sure on the state that you're going to that the community wants you, and you want to make sure they have enough energy locally to provide that. We went through the differences earlier on global energy. On a global basis, this network is an insignificant user of energy globally. It's 10 to 16 basis points, so 10 to 16 100ths of 1% of the global energy generated. But on a local or a regional level, it could be disruptive. So you need to make sure on a local or regional level you're not overtaxing a grid that also has civilians on it.
There are still some great renewable sites out there that are in our pipeline with good economics. I mean, they're out there. Just gotta find them. I think do we overstay our welcome?
Thank you guys. Thanks
Thank you.
everybody. Thanks guys and ladies. And
Appreciate it.
Been nice to see you.